Hello friends and welcome back to my channel. Do you ever feel like you win very small number of trades relative to the number of trades that you lose? Well, in today's video, I'm going to be talking about win percentage. I had some questions about this on my live stream today and figured I would make a video about it. So win percentage, does it matter? Does it matter how often you win? Should you be winning 50% of your trades or 75%? Or 90% of your trades? This is a question that I feel like a lot of traders, myself included, really struggle with when trading. We are human beings, and as human beings, we want to win. Right? We all want to win. It is a very natural, progression of our, species. We all want to win. We want to, it's like the survival of the fittest. Everybody wants to be on top, right? It's very natural for everyone to want to win. But in trading, it actually gets us into a lot of trouble. And in this video, I'm going to be talking about win percentage. What percentage of your trades should you be shooting to win? Is it okay if you have a certain, 40% win rate, 60% win rate? Like I said, that is what we're talking about in today's video. So before I get too far into this, do me a big favor and make sure down below to hit that like button and subscribe button if you have not already subscribed to my YouTube channel for more free trading content. Some of you guys who watch my content, you haven't yet subscribed to the channel, and if you would, it would really help out the channel where I'm putting out this free content for you around trading content. Okay, so does win percentage matter? That's going to be the question of today. I am going to say that if you feel like it is very frustrating, that you feel like a vast majority of your trades result in losses, right? Let's say that you feel like just 25% of your trades are winners, and then you're having a vast, large quantity of losses. So 75% of your trades are resulting in losing and 25% of your trades are winning. Is this okay? Is this good? Is this bad? Well, I think it comes down to some simple math that if I can understand, you certainly can in today's video. So 25% win rate, 75% loss rate. That sounds like, man, you're really bad at picking where the market's going to go. Like you're losing all the time. And this might sound very bad on the surface level, but it has to do with your risk to reward. Let's say that you take a buy trade in the market. You think for whatever reason, a stock or a currency pair is going up. So you take a buy position and you put a take profit on your trade. And let's say that distance is 30 pips. Okay. So you put 30 pips of a take profit on your trade and you say, okay, well, relatively speaking, I'm going to risk just 10 pips. Okay. So in this case, you've put a stop loss on your trade of 10 pips, a take profit of 30 pips, and you bought this market. Well, now if you won 25% of your trades, you're not actually doing as bad as you may think. So let's do some simple math. Let's say that you took 4 trades, right? So you take 4 trades with this model. And assuming we can continue to make 25% of our trades, let's break this down. So essentially we would have 3 losses, which are add up to, if each one is a 10 pip loss, 30 pips lost. Okay. And then that would mean we have 1 win, which would equal 30 pips gained, because remember, we are risking 10 to go for 30. So in this case, obviously, this is not ideal. We are making as much as we are losing. So that's not that great. But this shows you something that I want to get more into as this video goes along. It shows us that even though we're only winning 1 in 4 trades, we are still able to break even overall. Now, with broker fees, you're probably going to be slightly in the negative. But the main point here is that even though this looks horrible, like you're picking all the wrong trades and everything is going terrible, you're still actually breaking even with only winning 1 in 4. What if we were able to just increase this slightly? What if we were still using, by the way, this is a 3-2-1 because we are risking 1 for every 3 that we're looking to gain. What if we actually cleared this? Actually, let's bring that back. I don't want to clear that part. I want to clear the part down here. So let's say that we change this up a little bit. And let's say that we refine our strategy a bit. We figure out some things that could help to improve the entry and accuracy of our trades. And instead of 25%, we were able to get this up to something like 40%. And again, I know this is not perfect, but bear with me. Actually, I'm going to make that black just to fix this. And so let's say that now we have 40% of our trades are resulting in a profit now. So we have improved a little bit. We've found a slightly better strategy, whatever that may be. And we say now we have a 40% win rate. Then of course that would make this number not 75, but rather 60% of our trades are now losers. We are still winning less often than we are losing. And that might be a little bit psychologically frustrating, and I get that. And we'll talk about that a little bit more as we go along. But in this case, if we do some simple math, let's say that we take 10 trades, okay? We take 10 trades with our system that we have evaluated through our back testing, that we make 40% of our trades are winners and 60% are losses. Still losing more often than we are winning. We take that into consideration and we say, okay, our losses, we have 6 losses. 6 of the 10 result in loss, which means you have minus 60 pips, okay? And then we take that and we say, well, we would have 4 wins, where each time we're making 30 pips, and that puts us into a nice profit, because now we are looking at 120 pips on the wins. We lost 60. The overall result is plus 60 pips. We actually made profit this time. Now, all we did was win slightly more of our trades. So what you can see here is that if you are able to produce with a 3-to-1 anywhere above somewhere like 35%, you are looking really good. If you're able to even do 30%, let's try 30 just for the sake of it. Let's say that we have, and I know this is not going to be drawn to proportion, but let's just say we do 30%, and that would mean 70% of our trades are losses. How are we looking in this case? Again, we'll take the example of 10 trades. And how are we looking? Let's take a look. We would make 7 losses, right? Which results in minus 70 pips, and 3 wins, which would result in 90 pips. We are still profitable by 20 pips. So hopefully what you're seeing here is that although we are not winning very often, with a nice positive risk to reward, we are able to make money still. This is easier said than done. I'm not here to tell you that this is easy to do, because believe it or not, this is actually still reasonable, but not easy to do. You have to be, on your stuff. You have to be looking for good, proper entries and looking for, concepts that make the most sense when looking at markets. But the point here is that with a low win rate, you actually can still be profitable. Now, some people, I understand, are going to be very, very, not comfortable with this concept. We'll erase the board here for a second. And what I mean by that is they don't want to lose most of the time. Because I'm going to be completely honest with you, it is really psychologically stressful to take losses more often than you win. So let's look at some alternatives for my friends out there who are looking at higher win rate systems because of the psychological comfort. Now, I am going to say that I think high reward relative to your risk systems are the best. That is my opinion. I know, sorry for my handwriting. I think higher reward systems on paper are better, right? They, to me, make more sense because you are risking something small to make something larger. They are great from a risk management side. In my view, you can take lots of small losses and it just takes a couple big wins to catch you right back up and put you even into profit. For me, that's my favorite style of trading. However, this is not for everybody, and that's okay. Some traders, they don't want to do this. They don't want to lose all the time. They want to take wins more frequently. And I'm not going to say that you can't make money. I think that higher win rates are something that they are possible to execute properly and make money with. I think that they, they can be, tricky because you have to be very accurate with your entries. But if you're the sort of trader who can take great entries and can find good setups like that, if you want to rely more on good entries, then you're, welcome to do so. I'm not here to tell you can't make money. So let's talk about the other scenario. Let's talk about the traders who are, looking for that higher win rate because they want to psychologically have that easier mindset of winning more often. Oh, that was the other thing I was going to point out. Higher win rate systems are great for people who, they struggle with the psychological part of not winning enough, right? They want to take wins more often to keep them confident in the markets. In this case, let's analyze what it would take for you to be profitable with a win percentage that is slightly higher. Let's say that, of course, let's say, actually, let me try that again. I'm going to go here and I'm going to say 55% of your trades are actually wins. You might say, well, that doesn't, that's a little bit higher, but that's not that much. Well, you'll see the magic of how actually good this system can be. That would leave us with 45% of our trades are losses. Now, this is a little bit more appealing to some traders who want to win more often. So in this case, let's say that you were looking at this and you said, well, 55% of my trades are winners, 45% are losses. Let's do some simple math. Basically, let's do this. Let's say that we have 100 trades. Oh, by the way, I meant to say, let's say that you take a buy trade, right? And your take profit and your stop loss are equal distance from each other, okay? We are going for a 1-to-1 reward to risk, okay? That is the concept here. So if we took 100 trades and let's say we risked $10 per trade. In this case, we would have 45 losses, which at $10 a piece is $450 lost. Then we would have 55 wins, $10 a piece, coming out at $550. In this case, you make $100. Not bad, right? Now, I will caution you that with broker fees, commissions, spreads, things like that, this would probably come out to be, depending on what your broker is, maybe more like $80. Kind of just depends. The point is, you can actually do this, but you have to be pretty good with your entries. Because what I'm saying here is that you are winning more often than you're losing with a strict 1-to-1 reward to risk. Easier said than done. You may say, well, Nick, you should be able to pick entries really, really well. But the thing is, there's a lot of volatility in markets and you may get whipped out of your trade before it goes in your favor. Or you may just be straight up wrong about a trade. Or, sometimes the market just does some crazy stuff and you just have to deal with those things. So if you are the sort of trader that feels that you have a stronger ability to pick direction and get in and get out quickly without trying to hold on to big wins, then by all means, maybe this is the sort of style of trading that works for you. Now, if you are really good, you might be able to get something like a 60%. 60-40 win to loss would put you in a phenomenal place if you were able to do that consistently over the long term. But like I said, I think that is quite difficult to do. There are going to be traders who probably debate me on that and say, no, that's easy to do and all this and that. But I would encourage you to not, there's a lot of people out there who tout their ability to call the markets and to pick the direction, but the market is not an easy place to predict. It is actually quite volatile. There's a lot of noise in markets. There's a lot of differing opinions and it's a lot of speculation. So it's hard to be right all the time. So to me, this is why this is a harder system to trade than a larger reward to risk, although this might be a little bit more psychologically satisfying. And if you are a better entry picker, if you feel like you are very good with your timings, then maybe look at, lowering that risk to reward. Again, at the end of the day, this is something that you have to go test, take advantage of, these lessons and concepts that I put out. Go use your own, time and energy and effort to figure out what works best for you personally. And with that said, thanks very much for watching. If you enjoyed the video, make sure to hit that like button and subscribe for more free trading content. And we'll see you back in the next video.